Most of us, when we think about investing, we think about stocks and bonds, right? But what if I told you that's just the tip of the iceberg? Today, we're diving into the huge and often pretty hidden world of alternative investments.
It's a really simple question, but it's one that the world's sharpest investors are constantly asking themselves. If you've ever had that feeling that there has to be more out there than just the regular stock market, well, you're in the right place. Okay, so to really get what makes something alternative, we have to start with what's, well, standard. For almost everyone, the whole investment journey begins on a very well-trodden path, using a toolkit we all recognize. And this is that toolkit. We're talking about things that are publicly traded, like stocks and bonds. Or, those package deals like mutual funds and ETFs that basically just hold those stocks and bonds for you. The key things here are that they're super easy to access, and they're liquid, meaning you can sell them pretty much whenever you want. This stuff is the bedrock of most people's portfolios.
But what happens when that familiar path just doesn't get you where you want to go? For investors who are really hunting for higher growth, or maybe just smarter ways to manage risk, the public markets can start to feel a little crowded.
And this is the real turning point. See, the hunt for an edge, what investors call alpha, which is just a fancy way of saying returns that beat the market, that search often forces you to look where other people aren't. And that usually means stepping off the main road of public markets and into a totally different landscape.
And that's something else. That's the world of alternative investments. Think of them as a class of assets that just operate outside the whole traditional stock and bond system. They're playing by a completely different set of rules, and because of that, they offer a whole different set of opportunities.
So here's the official definition, an alternative investment fund, or AIF. Let's just quickly break that down. Privately pooled basically means it's an exclusive club. It's not open to just anyone on the street. And sophisticated investors, that tells you it's built for the big players. Institutions, very wealthy people who really understand the much higher risks involved and frankly can afford to take them.
This table just lays out the difference so clearly. Look at it. Traditional investments, easy to sell, open to everyone, heavily regulated for your protection. Alternatives are pretty much the exact opposite. Your money is often locked up for years, access is private and super exclusive, and they operate in a much more complex and less regulated space.
So what exactly are these funds? I mean, the category is huge, but it's really dominated by three heavyweights. So let's take a quick tour and meet them.
First up is private equity, or PE. The best way to think about a PE fund is like a super hands-on business partner for a company that's already up and running. They don't just write a check and walk away. They actually roll up their sleeves and bring in expertise to help make that business better and help it grow.
And the model is actually pretty simple when you break it down. A PE fund will buy a piece of a private company, they'll work directly with the management for a few years to make it more efficient, more valuable, and then they sell that stake for a profit, either to another company or by taking it public in an IPO.
Okay, next up, venture capital, or VC. Now, if private equity funds are partners for established companies, think of VC funds as the talent scouts of the business world. They place these really early bets on tiny, unproven startups, hoping that one of them just might become the next global superstar.
Venture capital is all about funding innovation right at the very beginning. It is the definition of high risk, high reward. I mean, you fully expect most of your bets to fail, but you're hoping that the one that succeeds is so massive that it pays for all the losses and then some.
And finally, we've got hedge funds. These guys are like the tactical special ops of the investment world. They use all sorts of complex strategies and a huge range of financial tools. But what really sets them apart is they can go long, betting a price will go up, and they can go short, betting it will go down. This flexibility means they can try to make a profit no matter which way the market is heading.
So, we've met the players. Now we've got to talk about the one thing that defines this entire world, this constant, high-stakes trade-off between incredible potential on one side and some pretty serious peril on the other.
It's really two sides of the same coin. On one side, you have these amazing benefits, the shot at market-beating returns, access to exciting companies you can't find on any stock exchange, and a really powerful way to diversify your portfolio. But on the other side, the drawbacks are major. Your money is locked up, sometimes for a decade. The investments themselves can be incredibly complex and hard to understand, and the legal paperwork can be a nightmare.
This quote just sums it up perfectly. The whole idea is a bargain. In exchange for taking on a lot more risk, tying up your money, and navigating a ton of complexity, you get a shot at much, much higher returns. It's a calculated gamble for sure, but it's for those who can afford to play the long game.
So you might be thinking, with all these risks, why even bother? Why do these investments matter so much? Well, it's because in today's world, the very definition of what a smart portfolio looks like is changing. And this visual just illustrates that point brilliantly. If you look closely, you can see how different alternatives serve different purposes. A private equity fund is all about chasing those really high returns. But something like an infrastructure fund, that's targeting a reliable, steady income stream and stability. And that's the key. Alternatives isn't just one thing. It's a whole toolkit for hitting very specific financial goals.
And this really brings us to the single most important takeaway. For sophisticated investors, alternatives are not about replacing your stocks and bonds. It's all about complementing them, adding these powerful engines for growth and diversification that you just can't find in the public markets.
Look, they're complex, they're definitely risky, and they are absolutely not for everyone. But as the financial world keeps evolving, the big question remains. For those who have the resources and the long-term vision to look beyond the obvious, could this huge, hidden market actually hold the key to unlocking future growth?